Hey everyone, welcome back to Crypto Bit Law, where we seek to break down the rapidly changing regulatory landscape around cryptocurrencies. At Crypto Bit Law, we don't wish to be on the left or the right. We want to be as objective as possible in showing you where we truly believe the regulation is going. But there appears to be a partisan tilt to how each side is going to be treating cryptocurrencies that we've noticed in some of the recent hearings. And I thought it would behoove us to analyze that for you and show you where we think each side is going to go. And where I want to start today is with today's press conference from Fed Chair Jerome Powell, where he was asked about cryptocurrencies.
I think the concerns there are not so much current financial stability concerns. I, of course, would support the views expressed in the President's Working Group report on stablecoins. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated. And right now they aren't. And they have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist, and you could have a payment network that was immediately systemically important, close to immediately systemically important, that didn't have appropriate regulation and protections. The public relies on the government and the Fed in particular to make sure that the payment system is safe and reliable, as well as the dollar, and to provide a safe and reliable, trusted currency. So, but I do think those are longer term. In terms of the more the cryptocurrencies, that are really speculative assets, I don't see them as a financial stability concern at the moment. I do think they are risky. They're not backed by anything, and I think there's big consumer issues for consumers who may or may not understand what they're getting, and there's certainly developments in the markets that are worth following, which are really not in our jurisdiction, but things like the kind of leverage that's built into them and those sorts of things is certainly worth watching.
Pretty anodyne sounding comments from the Federal Reserve Chair Jerome Powell, and that's what you'd expect from the Chair of the Federal Reserve. Their words carry great weight in the financial world, and if they say anything too extreme, they can actually move markets. But you have to listen closely to what he said. I think the most important aspect here of what he said was at the beginning, when he said he supported the President's Working Group's report on stablecoins. This was really the first attempt, major attempt that is, by the regulators, the executive branch, to weigh in on the cryptocurrency space. The President's Working Group was made up of people like the Treasury Secretary, Janet Yellen, who was at the Federal Reserve, now finds herself at the Treasury. Also the FDIC, who is in charge of ensuring and regulating the deposits of commercial banks. The Office of the Comptroller of the Currency, the OCC, who's in charge of regulating and chartering national banks. Also involved are the heads of the SEC and the CFTC, who have roles to play in terms of regulating financial institutions, depending on whether they are engaged in securities dealing or derivatives dealing, which is still at issue. But the most important aspect here is this report recommended that stablecoin issuers be regulated as insured depository institutions. This is important. This means that they want to treat stablecoin issuers as banks and bring them underneath the banking regulatory umbrella. Now, the somewhat incongruent aspect of that report recommendation is stablecoin issuers aren't banks. What do banks do? Banks take deposits and they lend out those deposits, creating more deposits, effectively creating money against which they lend more money, creating more deposits over and over again. They are the main creators of fiat currency in the economy, and that is why they are subject to regulation. Stablecoin issuers, of course, do not act like banks. What they do is they issue a stablecoin that is 100% backed by a dollar or a dollar denominated asset. That is not what a bank does. But they want to bring the stablecoin issuers underneath the umbrella. And we're trying to understand exactly why they're trying to do this. So far, this is the regulators talking. This is a Democratic administration. And Jerome Powell at the Federal Reserve is supposedly not political at all. Although maybe he'll end up at Treasury one day like Janet Yellen and he'll be political. Who knows? But at this point, this is the objective report of the executive branch regulators, what they really believe should happen to crypto, to stable coins. And now what I want to do is I want to go and look at the two hearings that have happened on stablecoins, the one before the House Financial Services Committee, the other the Senate Banking Committee. These two committees were called in response to this recommendation to try and understand how they're going to actually write the legislation that gets us to a point where we're regulating stablecoins. So first we're going to start with the chairwoman for the House Financial Services Committee. She's going to be asking a question of the CEO of Paxos about a program they have with Facebook. She's going to be citing a part of the President's Working Group recommendation that said that the stablecoin issuers shouldn't be affiliated with commercial entities, and she's going to confuse the program that Facebook is using as a customer of Paxos with it as a commercial affiliation. And then she's going to ask a pretty convoluted question about it. And you'll see where this is going.
I now recognize myself for 5 minutes for questions. Mr. Casarella, I'm a bit concerned about your company, Paxos' partnership with Facebook, which is now calling itself Meta. As you know, Facebook has attempted several times to enter the cryptocurrency market. Starting in 2019, they founded the Libra Association, based in Switzerland, with the goal of creating a stablecoin, but suspended its activities after this committee held hearings, and I, along with other members and U.S. regulators, raised significant concerns, leading to a number of Libra Association members pulling out. Now, in partnership with Paxos and Coinbase, Facebook has launched a pilot project with its digital wallet, Nova, for a limited number of individuals in the United States and Guatemala to send and receive money using your stablecoin known as USDP or Pax Dollar. As you know, one of the recommendations in the recent President's Working Group report focuses on mitigating systemic risk posed by stablecoins as well as concentration of economic power concerns. The report, among other things, recommends legislation that stablecoin users must comply with activity restrictions that limit affiliation with commercial entities, similar to restrictions most banks face to promote the separation of banking and commerce. While your partnership with Facebook is reportedly a pilot limited to a number of users in Guatemala and the United States, what is stopping Facebook from the future allowing its nearly 3 billion monthly active users to make payments and save funds with a Pax Dollar or other previously issued stablecoin through a Nova wallet? If this were allowed at such a scale, how would this not undermine the US dollar and the world's reserve currency?
You saw at the end there, the main point of this is to question how we're going to prevent a threat to the dollar as the reserve currency for the world. That seems to be what they're really afraid of. Because otherwise you'd think that facilitating remittances for immigrants in this country would be a great issue for Democrat politicians to get behind. It was very odd for this to be the opening question from a Democrat, the chairwoman, to ask of a company that is facilitating remittances back to the poor people in Guatemala who need that money desperately. And instead, what the question is how do we prevent any threat to the dollar position as the reserve currency? To provide some contrast, we're going to hear next from the Republican congressman from Texas, Pete Sessions, and how he feels about regulating cryptocurrencies.
The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. And to the panel, we appreciate this opportunity to hear from you. I think it's very important for us to hear from you. You're not the inventors necessarily, but you're the people that are going to make this work. I am tremendously impressed that from what I see, a lot of ingenuity, a lot of entrepreneurial spirit, and lots of advice about the future, about where this can grow is, I think, very important for us to listen to. I'm in favor of what you do. I'm not sure I want to go as far as you do on robustness of how much oversight you really want, because I think that in your perhaps infancy, perhaps in your modeling, what makes you better is what you are, and I respect that. The question I would ask, and I don't know which one of you to ask this, so I would just say we're always interested in a traditional financial model of identifying risk. What is a risk? We get very little into value, but a lot into risk. And so I would ask you that the value of much of this could be compared to stocks, IPOs. When they first come out, they might come out and be worth this amount of money, and 1 year later they're worth a lesser amount of money. I'm more concerned with the term fraud, of the value that we're selling of all these different positions that could be held. What do you do to try and look at what might be fraud? I know there's been openness about, a lot of discussion about how you allow information to be freely gleaned, you do these things, but is there an investigation or an understanding about what might be risky even though you accept it, or fraud?
Did you notice a change in tone there? Now, Mr. Sessions is asking a question that is highly pertinent. It's the question of fraud, and it's drives a lot of the FUD out there about cryptocurrencies, and as a legislator, he's right to ask it, but the opening was quite different. He's clearly open to the idea of cryptocurrencies, and what he wants to do is address the real fears of the public and try to write some legislation that addresses it, and he wants the input of the CEOs in the cryptocurrency space, who he has expressed respect for. It just shows a marked contrast. The contrast that we noticed immediately in this hearing, and the reason we made this video. I'm going to show you a couple of more people just to hammer home the point that there is a stark contrast between Democrats and Republicans and how they're going to treat the cryptocurrency industry. I believe this next gentleman really expresses the feeling of the Democratic Party about the cryptocurrency revolution. I couldn't leave him out because he did make the infamous reference to Mongoose Coin, which did not exist when he made the reference, and of course it's been created and I believe has got some significant market cap today. So that's why I love you guys, because y'all are such ironic trolls sometimes. But this guy needs to be exposed, because this is the kind of person who is in charge of writing legislation, and this is the kind of attitude that they express at a congressional hearing.
Crypto is many different things. Cryptocurrency is an incredibly volatile investment that aspires to be a currency that might displace or at least compete with the dollar. A stable coin aspires to be incredibly stable and is tied to the dollar. What they share is a culture, a vibe, a stick it to the man moniker, a belief that somehow this is new and hip and an attack on the powers of society. But the fact is that the advocates of crypto represent the powers in our society. The powers in our society on Wall Street and in Washington have spent millions and are trying to make billions or trillions in the crypto world. These include Goldman Sachs, JP Morgan, Visa, BlackRock, Citadel, Musk, and Zuckerberg, not to mention the CEOs that are before us here today. Everyone before us today is a crypto advocate. We will at some point hear from the crypto critics. We won't hear from CEOs. We'll hear from academics with their pencils and pens. Today we hear from the CEOs with their lobbyists, their PACs, and their power. And we wonder why we won't be able to protect investors. The regulators need to listen to this hearing very carefully. With all the money and power on one side, we will not be able to pass meaningful legislation. Don't cop out and say, well, you're not going to do anything until we pass meaningful legislation. And if you wonder about where the power is, Zuckerberg had to come here himself and sit there. Brian Armstrong sent his number 2. And Tether doesn't bother to show up at all. Zuckerberg did not have a day in the park. He did not enjoy it, but he had to come. Armstrong didn't, and Tether ain't here at all. Now, the number one threat to cryptocurrency is crypto. Bitcoin could be displaced by Ether, which could be displaced by Dodge, which could be displaced by Hamster Coin. And then there's Cobra Coin. And what could Mongoose Coin do to crypto coin? In the area of fiat currency, the dollar will always be more important than the Uruguayan peso, and the Uruguayan peso is not a joke. There will always be an Uruguay, and the Uruguayan peso will always have some value. Will Mongoose Coin always have a value? I don't know. I just made it up. It's a joke. Although I said that about Hamster Coin, and then I found out there really was a Hamster Coin.
You can see the attitude there, Mr. Sherman, and yes, it is a joke, but now it's not a joke, I guess, is the joke on Mongoose Coin. But you really can't make much sense of what Mr. Sherman is saying. He seems to be indicating that he is standing up to these powerful forces that have created the cryptocurrency industry. But at the same time, he seems to denigrate it. And he seeks to show that he is the one that is in the seat of power and not the cryptocurrency industry. So very mixed signals there. It seems to be just a general attitude of hostility. We're going to wrap up here by encouraging you to go check out more of these hearings. They really were informative. They showed you a lot about how the industry is trying to grapple with future regulation and how the politicians are trying to grapple with the technical aspects, but also how they're going to play to their political bases in their parties and what the agenda is going to be. There's the openings for the Senate Banking Committee hearing are another good contrast between Mr. Sherrod Brown, a Democrat who spreads all the different FUD messages you hear out there, and then Senator Pat Toomey, who clearly is on board with cryptocurrencies and seems to understand their potential and the potential for regulation to crush them. But what I want to do here is just point you to the most exciting part of this Senate Banking Committee hearing, which is the Elizabeth Warren segment. So here we go.
Senator Warren from Massachusetts is recognized for 5 minutes.
Thank you, Mr. Chairman. So, unlike other cryptocurrencies like Bitcoin, stablecoins like Tether and USDC are supposedly pegged to the dollar. And the reason for this is to reassure people that stablecoins are as stable as using the dollars you have in your wallet or in your checking account. A stable coin dollar, in other words, will supposedly be worth a real dollar. Now, that would make it a lot easier and a lot safer to trade among different tokens, to put up collateral for a risky bet, or even to pay for a cup of coffee at your local bodega. But I want to examine whether or not the stablecoin talk matches the stablecoin reality. Ms. Goldstein, let's say that I own $10 worth of Tether or USDC. If I want to trade my $10 worth of these tokens, am I guaranteed to get $10 back?
No, Senator. You're sort of dependent on the exchange where you're trading it. Because as a U.S. retail customer, I cannot go to Circle and say, please redeem my USDC. And Tether explicitly says no U.S. customer can redeem Tether. So I have to trade it on an exchange. Sometimes it fluctuates. Sometimes it's a little above $1. Sometimes it's a little below. But if there were a run, the peg could collapse. And we also don't really know necessarily what's backing all of these stablecoins, right? Tether is...
Hold on a sec. I want to get into that, okay? I promise. Because I want to just underscore this point, that if Tether's tokens were actually backed 1-to-1, it would be one of the 50 largest banks in the country. But we know that it is not. And that's because, according to Tether's own report, only about 10% of the assets backing its stablecoin are real dollars in the bank. 90% is something else, not real dollars. And if that worries you, there's a little more news on this one. The report that 10% of Tether's stablecoins are backed up by dollars is not actually verified by a comprehensive audited financial statement or verified by any government regulator. So, Professor Allen, let me ask you, let's say I'm not the only one who wants to redeem my $10 worth of Tether or USDC for dollars. And maybe there's bad news in the market and people rush to cash in their stable coins. What would a run on the stablecoin market look like? Could it endanger our financial system?
Thank you for that question, Senator. So a number of the witnesses today have said that stablecoins don't engage in maturity transformation and therefore don't suffer the same fragilities as bank deposits and runs. And that's probably true to some degree, but a run on a stablecoin would look a lot like the runs that we've seen on money market mutual funds in 2008 and again in 2020. And it could also share dynamics with the foreign exchange crisis we've seen in the past, like the Mexican peso crisis. So if holders of a stablecoin suddenly lose confidence in either the ability of the issuer of the stablecoin or the reserve of assets backing it to maintain a stable value, they could seek to redeem or exchange their stablecoin en masse. And if they have direct redemption rights, that would force the issuer to liquidate its reserve of assets. So right now, I don't think that would have systemic consequences. If stablecoin holders are only using them to speculate, they're not really going to expect stability, and so runs will be less likely. But if a run did occur right now, I think the impact would probably be felt in the DeFi ecosystem. And that's why it's critical that we not provide this government support to the DeFi ecosystem.
Okay, so let me go there. Sorry to interrupt, but let me go there. We know that stable coins are not always stable. In fact, it's worse than that. In troubled economic times, people are most likely to cash out of risky financial products and move into real dollars. Stable coins will take a nosedive precisely when people most need stability. And that run on the bank mentality could ultimately crash our whole economy. But there's another piece of the risk here, and you've headed in that direction, Professor Allen. DeFi is the most dangerous part of the crypto world. This is where the regulation is effectively absent, and no surprise, it's where the scammers and the cheats and the swindlers mix among part-time investors and first-time crypto traders. Shoot, in DeFi, someone can't even tell if they're dealing with a terrorist. Stablecoins provide the lifeblood of the DeFi ecosystem. In DeFi, people need stablecoins to trade between different coins, to trade derivatives, to lend and borrow money, all outside the regulated banking system. Without stable coins, DeFi comes to a halt. So, Professor Allen, does DeFi threaten our financial stability? And can DeFi continue to grow without stable coins?
That's enough of that. Now, At Crypto Bit Law, we do like the DeFi ecosystem, and we enjoy participating in it. We understand why Senator Warren is spreading the FUD about that. I particularly enjoyed the allusion to terrorists. It made me wonder, maybe I've done a transaction with a terrorist at some point on Uniswap, but probably not. But she does actually raise a good point. The point about Tether. Tether isn't actually backing their stablecoins, it appears, and they won't tell anyone what they're holding. We did a whole video on Tether and the possibility of weakness in their commercial paper holdings. Although they're dollar denominated, there may be significant exposure to Asia, and in the Evergrande collapse, there may be some exposure there. You can go check out that video. But importantly here, the point she's trying to make is that the stable coins are dangerous because they are susceptible to runs. And what is the solution to protecting the public against runs? Well, that's federal deposit insurance. And we've come full circle to what the ultimate goal here is to bring them underneath the traditional banking regulations. And finally, we'll leave you with this: Hillary Clinton on cryptocurrencies.
And then one more area that I hope nation states start paying greater attention to is the rise of cryptocurrency, because what looks like a very interesting and somewhat exotic effort to literally mine new coins in order to trade with them has the potential for undermining currencies, for undermining the role of the dollar as the reserve currency, for destabilizing nations, perhaps starting with small ones, but going much larger. So when we...
And there it was again, the threat to the role of the dollar as the reserve currency. And this is ultimately the fear the Democratic Party is expressing. And it is our goal here at Crypto Bit Law to try and understand why. Because we know that sensible regulation is the key to mass adoption, and mass adoption is the key for all of us who are participating in the cryptocurrency space to see the changes that we want to see. And unfortunately, what should be a bipartisan effort is turning into a partisan effort where one side doesn't really appear as interested in writing regulations as they are as stifling the industry with overregulation. We hope you liked this video. Please subscribe, like the video, comment if you'd like. We are going to be putting out more videos exploring this issue, so stay tuned. HODL!